define the bubble here and the idea of dividend growth as a proxy for yield. I mean, that's where we sort of are going into next year.
We got a lot of questions about this back in the zero interest rate world. Is the bond market a bubble? My operating definition of a bubble was always that when the only reason why you're purchasing the asset is based on the belief that the price will be higher in the future.
A lot of people say that's where we are right now.
That maybe, but there's a lot of counterpoints to that. And in the bond market, that clearly never applied. I mean, if anything, it was the antithesis of a bubble. People were buying bonds because of the fear that prices would go lower in their stocks rather than a bubble. So I think the bubble talk gets a little overstated, particularly when we're talking about zero interest rates. It goes back to a lot of the other fundamental reasons for that secularly lower growth, the lower growth globally that we're seeing. There are real reasons for why you have elevated prices in fixed income and very low interest rates that aren't really this kind of behavioral characteristic that we saw in the 90s internet market or in the housing market where people bought because they thought they could flip and make money, not because they valued the underlying asset. People really value the underlying asset in fixed income.
Where do you see bubbles, Scott?
Well, it's interesting. I think Jeff's definition is right on about how I would look at a bubble. That is the reason for buying the asset is only because you think it's going to go higher. And I differ with him in the bond market. Clearly in a world of negative interest rates in Europe and Japan, the only reason to buy these assets other than just to essentially safe keep money and pay a safekeeping charge with negative interest is the hope that the asset's going to go higher in price. So as U.S. rates keep getting lower and lower, the investment argument for bonds is being greatly diminished because investment says that you expect to make a positive return. And the opportunity for that investment is going away, which means by definition we must be moving out of a market where people are making investments and they're speculating. So I think the bond market is in a bubble, or at least approaching a bubble. And I do see some other parts of the economy like commercial real estate, especially in residential real estate, for instance, in New York, high-end real estate in Los Angeles. We're starting to see inventories build up and price erosion. So we've got some bubbles here and there for sure.